Hello, everyone. Welcome to another episode of Firm Returns Weekly. This week, we've got a few updates to cover on Aviva, Warner Brothers, and Warner Brothers Discovery. But it should be a relatively short episode, I think. Just a couple of things. I've been traveling this week, so as yeah, I didn't have no time to do a major amount of work writing. So yeah, let's just share my screen so I'll show you what I have. So the first bit of news is that Aviva has announced the acquisition of Optiom O2 Holdings Inc., a leading provider of vehicle replacement insurance in Canada, for a total consideration of £100 million or 170 million Canadian dollars. And this was last Monday, 27th. So yeah, this is going to be a fairly capital light acquisition, so helping to align with their growth strategy that they've been pursuing of trying to shift to that. And I think they're now at the point where they've crossed the 50% mark, so it's like 51% or something like that of the, certainly over 50% of the total business is now capital light, which is good to see, and it should help to develop their Canadian operations in particular, which their goal for Canada, as you might expect, are currently in the last year or so, they've gone from being the third largest insurer to the second, and now looking to take the top spot at some point. So these kind of acquisitions help with a bit of inorganic growth to move them towards that goal. I don't know how far ahead the number one insurer is, but yeah, it's good to see some good progress along that route, and it looks like a fairly rational acquisition. Don't know about they didn't give any detail on what kind of valuation this puts on the business or how many customers it brings across or anything like that, but it's a fairly modest acquisition, and I think just seems fairly rational in terms of the segment it's in. So vehicle replacement insurance fits quite well, I think, within the overall motor insurance business that they have in Canada already. So not moving into some completely different line that they're not familiar with. So yeah, that's it for Aviva. So moving on to Warner Bros. Discovery. There's a couple of things. So the first thing was that there's been this DealBook summit going on, New York Times DealBook summit going on this in the last week, and there's been a few big guests on there, big interviews and so on. One of which was Elon Musk saying, "Go fuck yourselves" to the advertisers. That was quite entertaining if anybody hasn't seen that. It's worth watching. But yeah, David Zaslav also made an appearance at the summit, and while I didn't make as much of a splash as Elon Musk's interview, it was certainly interesting, particularly for Warner Bros. Discovery shareholders. So a particular takeaway for me was that the compensation package for the Warner Bros. Discovery executive team is being refocused on free cash flow generation and debt repayment. So because it normally in the proxy statements of that, they go into a lot of detail on how they met their last year's targets and all that, kind of performed against those, and how much their compensation is going to be in light of that. There was a little bit in there, just like one page in, I don't know, 69 pages of proxy statement that was talking about these additional incentives. They're incremental ones on top of the existing incentive, which for the current stuff, I think a large part, I mean, that was given something like a £200 million share options between now and I think it was over the next 10 years or something, vesting over the next 10 years. And I might be exaggerating that, but anyway, they had a very high exercise price on them. I think the lowest one was like $35 or something like that, or maybe even $37, and they went all the way up into the 40s. And obviously, the share price right now is around the $10 or $11 mark. So it's a long way to go before you can profitably exercise those. So yeah, I think to incentivize perhaps, so it's looking quite likely that those will all expire. That he won't actually exercise any of those, because he would do better to just buy the shares on the market instead. But yeah, so as those are not looking like much of an incentive now, they've kind of done this additional scheme on top, which I think is worth about, I think it's split between all of the executive team stuff like that. I think it's worth about $10 to $15 million total, but it's quite focused on the, as I said, the free cash flow generation and debt repayment. So this is a little extra thing they've got, and this, they did actually originally announce this back in the thing, and it was, there was a so like a current statement or something like that that was issued on the 6th of March. But here's the a little excerpt from the proxy statement that was issued earlier this year, which with the annual report and so on, which discusses this additional compensation package. So they say the committee is also very cognizant of the importance of for the company's long-term financial health to reduce its leverage. In furtherance of these objectives, on March the 6th, 2023, the committee announced its decision to implement an incremental incentive compensation program designed to promote and reward achievement of the company's initiatives with regard to free cash flow and reducing leverage. So I don't think they really went into a lot of detail about what the thresholds were and like that. I don't think they said any of that stuff, but I'm guessing we'll be told retrospectively what those were. But yeah, it was worth and this is basically anybody that's involved with strategic generation of free cash flow and reducing leverage. There was quite a few people in the executive team that were impacted by this and benefit from it. And I think they also extended the long-term incentive program to more than just David Zaslav and Gunnar Vodenfels, and it's been extended to more of the executive team as well. So hopefully I guess they're thinking some more alignment there. But anyway, interesting just to note that, and that was brought up in this interview. So it's obviously I'm considering when you take away that $200 million option thing, that this of options that are probably going to expire worthless for David Zaslav. His actual base salary was about $3 million, I think, $2 or $3 million, and then you've got up to, I think, $10 or $20 million of performance linked bonus. And I can't quite remember what the performance starts with that were on that. I'm not sure whether it was to do with share price component there as well, but he might not have hit those. So basically, his actual take home pay in the last year has probably been quite a bit less than the headline figure of what he could have had with all these options on. So this 10 billion extra boost or whatever is probably going to be a substantial increase on what he actually took home, or he would have taken home otherwise. So yeah, align incentives, and we've seen it playing out. We've seen the free cash flow and leverage. We've seen them making progress on both those targets. So I think it's having the desired effect. So the interviewer also brought up the topic of further acquisitions, and David Zaslav was quick to say they've got plenty to focus on internally right now, so that they're not interested in doing any external acquisitions. I do hope he sticks to this, as I'd like to see a lot more deleveraging before any more merger and acquisition was considered. One of the things they told him, the interviewer just hinted at, was maybe buying Paramount or something like that. But yeah, like I say, I maybe see that long term as being a good thing. But right now, there's lots of things they can do. There's international expansion of Max and all the rest roll out around the world that they could be putting money into, and further deleveraging, which would be good. Yeah, so growing, I don't think they need to be doing think they've got plenty to work with, plenty to sell already. They need to be doing acquisitions of additional content and studios and stuff like that in order to make Max more appealing. They just need to work on distributing it wider or more widely. Right, and so then the last bit of news for the week and for Warner Bros. Discovery was the release of the Arkham trilogy of games. So basically Batman revolving where you play as Batman within them. There's Arkham Asylum, Arkham City, and Arkham Knight, and they originally came out on PC and consoles, or other consoles, Xbox and PlayStation, and I think the started back in 2012 or 2011, something like that, Arkham Asylum, and so quite old, especially Arkham Asylum and Arkham City. I think Arkham Knight was maybe 2015, 2016, that kind of time. So yeah, pretty old games, but they're big open world games that have, really quite graphically and performance intensive, and they were sort of notorious for being hard to run even on fairly high end computer hardware and so on, so graphics cards and things. So it's certainly going to be a real challenge to get these ported over to the Switch, which was using 2017 hardware available at the time and in a portable graphics tablet format, effectively. So really a very ambitious task to get them running on that but they did fairly well with Hogwarts Legacy, getting that ported across to the Switch. And I mean, the reason they're doing all this is the Switch has, I think, at least 100 million active players or something like that on it. It's a very considerable number, and probably I think it's goes. I don't know. I can't remember exactly how it compares to PlayStation, Xbox, but it's definitely more than Xbox, I think, and it's kind of, I'm not quite sure what PlayStation numbers are, but yeah, it's only a very considerable number of a very considerable audience size to put it out to, and some of these people have only got the Switch, or that it has the mobile format, the handheld format as well. It's been connected to the TV and so on, that appeal to some people, even if they've got other consoles as well. So that's the reason for doing it. There's an audience for it that's additional to the other platforms, TV based gamers or PC based gamers. And yeah, they did a fairly good job, I think, with the port of Hogwarts Legacy from what the reviews I'd seen and stuff like that. But it looks like it's been a bit mixed with Arkham Asylum, or the Arkham trilogy. Arkham Asylum, I think, from this review is quite good. I recommend giving this a look. So Arkham Asylum did fairly well. There's a few performance drops of like frame rate and things like that, but it looked like Arkham City, ironically, which is potentially the more ambitious game out of the two. It has much more open world elements to it, because the first one was more on rails, sort of linear playthrough sort of game. And so Arkham City, you would have thought, would have been harder to port, but actually I think they did a better job at that and managed to maintain fairly consistent sort of 30 frames per second, which is what the old sort of Xbox 360 and stuff like that used to do, and is quite a playable frame rate. And it looked all right graphically. And then, but Arkham Knight, from what I've seen, which is the third and final one, which is the much bigger open world, much more ambitious game, has probably got it, from at the moment anyway, a few too many performance issues to really be quite an enjoyable playing experience. When I've seen the frame rate dropping down to the low 20s quite frequently during combat and things like that, so it makes it quite hard to time your combos and all that kind of stuff. So yeah, quite a bad experience, I would have thought, playing that compared to on other platforms. But maybe that was improved. Maybe they'll be able to patch and get it working. But it looks like, I mean, the release of this game was delayed by, I think, about a month anyway. So they probably thought, oh, this is not in a state where we could release it back then. They needed more time. So if they've already spent an extra month on it, I'm not quite sure how much more they could squeeze out of it to improve it. But yeah, it's not too bad, I think, and I'm sure it will get discounted fairly quickly by the looks of it. Just with the performance issues and stuff like that, it's probably going to end up getting discounted very quickly. But hopefully they'll get a return on their investment doing the port. It can be quite expensive to port games to other platforms, especially when it's such a challenge to try and get it to run on a particular platform. But anyway, hopefully they'll get a return on it. And it sounds like at least the first 2 games are quite playable. And so people should hopefully enjoy them. And maybe the last one will get fixed. But anyway, like I said, it's going to be a fairly quick episode this week, fairly short. So that's all I've got for this week. Sign up to the newsletter over on firmreturns.com, all entirely free as usual. Subscribe to this channel, give the video a like. Yeah, all like that. And I'll see you all next week. And thanks for watching.